JB here. Hope everyone is doing outstanding. Monday, April 7th, 3:30. This fine afternoon. Talk quick about the market. Some names I'm looking at. Go from there. S&P down about 0.75%, right at that 502 handle. What a crazy day. I don't know. I mean, there's days over the years where there's been some days like, wow. I mean, obviously the flash crash is one of them. I'm trying to think of some of these other sessions, but this morning's reversal, I mean that's got to be up there, nearly a 9% morning half hour reversal that saw the market go from whatever it was down 4% up. It was the crazy, pretty remarkable, but that does not happen often. Uh, so today, I guess there's a couple things that I again, I try to spin things with a half glass, glass half full kind of optimistic look or optimistic view. But it seems like the market, I wouldn't even call it price discovery, but maybe we found at least short-term support, right? So uh, we had the overnight session. Actually, I think the SPY got down to 578 and change, but 582 or so. Then we got there this morning after the open, and we had that reversal. So certainly an area that this week will be a key spot. Hopefully, we don't gap below it. That's not what I want to see. I want to see it either test and hold or test and break, and then get some puts on that break. That's one thing. The other is if you look at what we did on Thursday and Friday, the markets, it was like I wouldn't call a meticulous sell off or just a melt off, but when the market sold off, it seemed like a steady selling pressure, not a lot of bounces. It wasn't a fast slide. And then both sessions on Thursday and Friday. Thursday we closed exactly at the lows of the day on the S&P, and then Friday was pretty much right at the lows of the day. And here is today, knock on wood, we have 28 minutes left in the trading session, pending a 20-point drop on the S&P on the SPY. We won't close at the lows of the day. So I'm taking everything with somewhat of a grain of salt, keep things small. The premiums were crazy. Like I was looking at the SQQQ this morning at the open, and if you had the calls, the thing was up like 15 or 20%. The calls are barely up 75%. When I say barely, that's in the context of options, right? Because typically when a stock is up 15 or 20% or more, the option contracts could be up a couple 100% at least, at minimum. So the risk reward there is not the best in my opinion. Take a look at SQQ now, and if most of the calls are flat or red, and calls because it's an inverse ETF. So the calls, if you're looking to play SQQQ, you're playing as the 3 times bear ETF, and that's down to $50. So that's kind of the gist of it. So this morning, it's kind of funny. I made a joke, but maybe it's not a joke. But reports came out that they were going to put a 90-day pause on uh, on the tariffs outside of China. Like so, China, the tariffs will be in effect. Everybody else 90 days. And it's funny. It's Bill Ackman came out and said that over the weekend they should put a 90-day pause. But in the whole sense of things, that's what they should do, right? I mean, now everybody's kind of like, okay, maybe they're serious. Let's wait 90 days and see if we can work things out. They can work out all the loopholes, the countries that got screwed over completely because data, because the math, right? That's some of it. Now you have reports out that supposedly there's a math error. Who knows? I don't even know. You read all the headlines, and even like I use Market Watch kind of as my the proxy for the headlines because it's either if the market's down, they have crazy crash headlines, or bear market headlines. If the market's up, it's the reverse. So uh, yeah, so stock market will go down 80% when this is over. Says, but those kind of headlines. So that's why I've been watching. But funny, they kind of put that out, and then the market rallied, soared. So it's almost like everybody's on edge. I put that on the watch list this morning when I was on the rant this morning. I said, I'm nervous. I'd be more nervous that we have some kind of headline that just squeezes, right? And I'm sure there's going to be more headlines that squeezes, and it might be some in the reverse. But then after that headline, then it came out said, "Oh, it was a fake report," which probably is not. I'm sure it was being discussed. And then you had President Trump saying they're going to slap another 50% tariffs on China. You might as well just make it 199.9%, whatever, just 200%, whatever. Just make up numbers, just keep throwing numbers out there. But surprisingly enough, the market kind of held up. So I think maybe, we'll get to the point where hopefully some concrete negotiations come out or whatever, or that 90-day pause comes, and I think maybe we can find at least some short-term footing. So, and again, I mean, this is curable, right? If the quicker the cure happens, the less impacts, right? I mean, if they wait a couple weeks and the tariffs are in place for a while, obviously the cure is not the same, right? That you're going to lose some fingers. you know, if you have a yeah, if there's an infection in your foot and you take the antibiotics now, maybe you'll be able to save your fingers and toes. But all right, so that's kind of the overall market. Again, not much in the way of catalyst until Thursday. So we get the CPI data Thursday morning, and then we have earnings season. Q1 kicks off with the banks, commentary around the tariffs and all that. So we're already getting comments from Jamie Dimon. It seems like every other day. Uh, so I don't think there's going to be any surprises. So to me, it's all just what happens with these with Japan, with Vietnam, how these tariffs, especially in Southeast Asia, how does that all how's that all look? How's that work out? So, all right, so that's overall market. And funny, you look at my chart. So this is my chart from this morning. And I put, again, I always say these annotations are done. Then I don't put them in yesterday and then put them over the weekend. These are over years, uh, 12, 15 years, probably more than that on some of these. But take a look at the SPY. So it hit all the way down to 505. That was one chart. And then look where we hit today. And I pull it back. And again, I don't make these lines up. I didn't put this line in today after we hit uh, the 582. But sure enough, where do we go? We hit right down at that 582 quick before we bounce. So again, that's a key area going forward, at least this week. If we remain volatile, I want to see that hold. And also now you see a lot of indicators, right? And we had bullish crossovers when we were selling off 2 weeks ago after the correction, and now we have the reverse. We have death crosses, right? Which typically not a good thing when you have the long term crossing over the short term. Oh no, the 50 crossing over the 200-day moving average, which we're almost going to get on the SPY here soon. So I'm sure there'll be a lot of chatter of that. All right, so that's overall market. That's kind of my thoughts there. Also, I mean, take a look at the VIX, which it was flat a minute ago, but it's still elevated, right? So historical levels, I mean, you could probably count on 20 fingers how many times the VIX has closed above these levels. So it's at 46.89 right now. It's up 3%. Is above the upper Bollinger Band. And then the amount of stocks trading over there, 200-day moving average on the S&P at 20%. So still not the lows of 2020, but getting there, getting close. All right, so now overall market. So now individual names, and first RH, I was put on the watch list this morning. Yeah, you had an update from the company Friday afternoon, and then you start looking. I mean, has it been oversold? Its earnings weren't that bad. I think there's a lot of issues, obviously, with the tariffs. So if there's any clarity, especially with Vietnam, maybe it starts to run. So I went and got those calls this morning. At first, I'm kicking myself. I'm looking at premiums, and I know just looking at RH to get calls, I mean, they're $50 out of money. So pretty much it's got to go up 33%, well, more than that, just for my calls to get into money. That's when I think the stock was 146 when I was starting to get the strikes. But I was looking, I'm like, I don't need it to go over $200 for the premiums to go up. I just need it to bounce, right? So I got the 200s, and sure enough, that news came out. Boom, it's all of a sudden it's 170. So it's pretty remarkable, but uh, what do they say? I always say, luck is when preparation meets opportunity. That was the preparation part. I mean, it looked like an opportunity, and then I got lucky. So, uh, able to lock some in for a little over 100, then 500%, then just a little more for 600%. Now I just have two contracts left. I'll just hold those. It's a name, right? If there's more negative headlines, I mean, it could be back down under 145 in a flash. On the flip side, if market finds footing and rallies, maybe we get to 530, 535, 540 on the SPY, then you start looking at RH up, and maybe it gets back over $200. And I'm not saying it's going to fill the gap today, well, this week, but I mean, it's the earnings gap, which they just had earnings last week. So I just think there's an opportunity. So I'm not going to add any more strikes. I'll just hold on to the last couple. And, I don't even know if I will use a stop depending. I mean, I put that when I put it out on in the chat room and on the private feed. But yeah, so all right, that's RH. So now also, Wayfair also spiked. It was 29 and change after that news came out in regards to the 90-day pause. Then once the news came out, or at least the White House came out and said, no, that's fake news, it started to tumble a little bit. It actually got halted. And it wasn't even down that much. I hate halts. Just halts drive me nuts. Rants for other days on that. but still up here to nearly 3%. Still have those April 30s freebies from last week, so I'll continue to hold those. Uh, I was actually looking for some more strikes on it, but I'll be patient. There's no reason to rush because it's not like anyone who says they're 100% convicted that the market's going to rally this week, unless you have insider information or you know exactly what they're going to do. You can't say it without a doubt. One headline can change everything, which kind of makes it very frustrating to trade. But at the same time, it can be very, to me, I think the market's skewed for more surprises to the upside, but I don't know 100%. So no reason to, I'm already positioned nice to take advantage if that does happen. If it doesn't, I want to be in a spot where, I have a miserable day. So right now that it's working out. So that's Wayfair. GameStop this morning opened in red. It was in the 22s. I'm like, this is going to be green by 10 o'clock. By 9:51, it was in the green all the way up to 25 by 9:55, and then it's been chopping around all the way back down to 23. It turned red, back in the green. Now it's up here at 24 $4. I was actually looking at it's interesting because the May strikes, the May 55s are expensive. Let me see. I didn't even pull them up recently. Um, and then I was looking at the May 40s. The May 35s look interesting on a risk war basis, but similar to these other names, I'll probably be patient. Yeah, the May 40s, I was looking, I think they were like 65 earlier. But then you go up and you look, and it's like the May 50s, a 32 by 40, $10 less expensive strike are the May 40s are 57 by 62. I'm like, why would anybody pay the 50s? Unless, I mean, they're not even half off. Well, they're like, just to me, the risk reward on the 50s don't make sense, don't jive. So I don't know if because the implied volatility is so high, but don't be surprised if they get some May 40s. I'll be watching, still have those April 29s as well. I locked some of those in on Friday. And then later today, I added deck calls, and surprisingly enough, I mean, it got up to 109 after the news in the early morning, and then it chopped around back into red down to 102, and then I was kind of on the fence, but I'm like, I'm looking at deck, and it's got similar setups. I was up. I was either going to add Nike calls or the deck, so I went and got the deck because I was looking on Friday. I thought it was similar, attractive risk reward. I mean, stock's been cut in half, more than cut in half since February, and it was actually I thought the earnings were pretty decent. It's just there's a lot of concerns and questions, especially again around the tariffs and their inventory levels and growth. And it's one of those brands that t- can take a hit if we're headed towards a recession, which you already see headlines. Oh, we're BlackRock, Fink, whoever his name is, Larry. Is a Larry? He already says, oh, he thinks we're in a recession already. I'm like, what? What data gives you that impression? Because if you take a look at a jobs report, uh, every piece of data that's come out outside of uh, the consumer confidence, the soft data, the market's the economy's doing well. So egg prices are down, right? So that means a lot. I'm being sarcastic. All right, so that's deck. The thing is, I was looking at the weekly strikes, and early in the morning, the 120s, I was like, 125, because if the market bounces, deck can at least recoup a lot of losses. Maybe gets to 125, 130. But then I start looking later in the day, and the calls into next week actually look attractive on a risk war basis. So now I have time. If we do bounce, I think it heads into the 120s. If not, they're inexpensive enough that if they go the wrong direction, I don't know if I'll be patient. Maybe I'll add more strikes. Uh, that's deck. Here's Nike too. Similar setup to deck, right? Nike, not as sexy a name in regards to some of the moves. I think deck might offer some better uh, multi-bag potential on some upside. And for some reason, I'm just not a fan of Nike recently, so I kind of like stay away. Uh, but certainly a name that gets set up there. Uh, and then other names I'm in. I mean, Roku's looking great today, but gonna need that one to move. My calls are still taking on a chin, but actually up from last week, which is good. Um, Baidu, which you would think would just be getting absolutely destroyed today, was it down 2% earlier? Yeah, it's down 2.95%, just at $80. If China and US work out a deal, I could see China, Baidu, Baba, and all those names just going bonkers. The thing is, it's like, I keep saying it's like China's like the US is a consumption economy. China is a manufacturing economy, right? And real estate, right? And then China sets goals. That's what they do. Every time they have these yearly meetings and I forget I forget what you call them. Uh, and they sit in these closed door meetings and they come up with a goals for their GDP. That's what they always used to do, 7% growth. They want it to be that, following China for so long. That's what they do. And then I wouldn't say they create that growth, but that's that's some of the exports, right? Because of the manufacturing capacity, they can export and it's very inexpensive. So to be able to duplicate that in the US, it's like if the US can manufacture those items at the same cost, what we would be doing it, right? Why would we want to lose jobs in manufacturing? It's like free market forces. So that's where the tariffs get me a little bit, but I get it. There's obviously there's some issues, especially, when it comes with the tech side of things. We don't want China infringing, we want it to be uh our internet intellectual property protected and all those other things. So it's not just about the tariff part. It has a lot, I think, other moving parts with it, but it's frustrating. Anyway, all right, rants for other days. Some other names I might look at. Again, SQQQ. If things do hit the fan, I'm not going to get any today, but if we get back under 42, uh, certainly be looking for some calls here. I'm just trying to think. In my head, I'm trying to rationalize what could happen here overnight. And we already had the huge move, 13% down on Hang Seng, biggest drop since 1997. So some of those moves, I just I'd like, oh, is the worst case scenario baked in? I don't think the worst case scenario is baked in at all, but I do think uh the surprise elements and stuff have been removed. So now it's just a matter of like wait and see, right? And hopefully things play themselves out. And just the more days that go by without things getting amended and so on and so forth, the worse it's going to get. And then we'll start talking about 440 on the SPY, 400 on the SPY. I just don't think that's going to happen, but yeah. U.S. manufacturing, same goods, the same price. You imagine that? How if we did, we why would we have to import it, right? I mean, that's just maybe it just seems too simple, right? But I get it, and there again, it's the same thing. It's like you have countries in South Africa, that country, in South Africa, in when I say in Africa, but then that country inside of South Africa that's landlocked, right? And they make Levi's jeans, right? But like, it's a poverty-stricken country, 2 million people. I mean, how are they supposed to import the same amount that they export, right? Uh, I don't, it's like that. U.S. might make some cars, and it's like, what are you gonna drive the cars, ship them, bring them, and then you're gonna have people who can't afford them. So it's like, I, it's again, I'm not an economist. I'm not. I don't I don't know. It's just some of those stuff. It doesn't jive. It doesn't make sense, right? So if we manufacture the cars in the U.S. at the same cost or less, you would think free markets would take control, and that would happen. And again, we want to protect our jobs too. So you just don't want to make it to the point where we're trying to protect our jobs, but at the same time, the price is going to go up, even though we protect the jobs. So having the jobs, I don't. Rants for other days, folks. Have a great day. We got 13 minutes to open. I'll be back. Rock and roll.